Joining me now for more on the markets is Sean O'Hara. He's the president at Pacer ETFs. Sean, great to have you on the show. Joining us remotely today, stocks certainly in rally mode. What can you tell us?
Well, good morning, and thanks for having me on, Kristen. I've been saying sort of that there's been three major headwinds in this market. One has been the tariff talks, two has been the tax bill, and the third has been sort of the Fed. And I've sort of been of the mind that, once we see some of these things getting taken care of, and I think the big news today is the China tariff talks, that takes one of the headwinds out of the way. Hopefully we'll get in Congress to finalize on a bill by the end of this month so that we get something done by July 4th through the Senate, and then we'll see what happens with the Fed. So basically what's going on is the market's sort of reversing itself from some of the uncertainty we saw earlier this year around tariffs and what that would mean to prices and the global economy. And so I think getting that tariff thing behind us and seeing some positive news is obviously what's causing this wonderful reaction this morning.
Interesting. Now, let me ask you this, Sean. We see a wonderful reaction, as you just described. Is this momentum that can continue building? Do you think we're on our way back to that February 19th high for stocks?
Well, I think eventually we'll get there. I think there's a second leg to this, and that is that there's a great deal of institutional and hedge fund money that's been net short. And so I suspect that at some point we'll start to see, sort of a short cover rally that will go along with the sort of euphoria from this announcement over the weekend. And so that could be a major catalyst to moving things even higher.
Interesting. Besson saying he's likely to meet with China again in the next few weeks to continue negotiating. What does this tariff removal or reduction, we should say, at least for now, mean for the economy and thus equities?
Well, I think it removes some of the uncertainty. The markets like to have as much certainty as they possibly can. And with, these things up in the air, the tariff talks, the tax bill, and, the Fed's position, those are sort of three, big, sort of clouds, if you will, that get in the way of that clarity. As we start to see these things sort of, get removed and we get more clarity on what things look like going forward, I think that's good for the stock market. I also think it's good for the end consumer and the economy. And so there was, a great deal of concern that, inflation would come back as a result of these tariffs. And, I never was in the camp that thought they were going to actually be implemented at the rate that we originally announced. I thought we would have cut deals, and I think that's what's happening. And so I think that's overall good news for the consumer and good news for the economy.
Interesting. And in terms of where we go for here, earnings obviously very much still in focus. We've gotten through the biggest of the tech names, still have yet to get NVIDIA's report. That comes a little bit later in the season. What have you gleaned from company comments specifically on tariffs so far?
Well, I think if you're running a big company and you don't have clarity into what's going on in the future, then I think you have to be cautious about your future guidance. I think we've seen great earnings reports coming in, and so that's basically a scoreboard for the past. Going forward, I think if we get some of these things sort of cleared up, then I think we'll get guidance for future earnings. And my expectation is that, much like I didn't think they were going to have much of an impact long term, I thought they'd be short term events. I think we'll start to see that the earnings picture will become clearer, and overall the economy continues to be strong and companies continue to invest. So I think this is definitely a positive for future earnings.
Interesting. And in terms of what we expect from the Fed, that's a big question mark here as well. Obviously, Jerome Powell indicating that he's willing to take his time, wait for more data. How does that factor into the picture for equities?
Well, I think that's a second half of the year issue. I don't think the Fed's going to act in the short run. I think they're still focused laser on the inflation number. I think they were of the opinion that these tariffs could potentially be inflationary. Again, I never thought they were going to be, permanent. So with the price of oil being down, in the low 60s, it was in the mid 50s earlier last week. But I think this tariff talk sort of unlocks that global recession narrative and puts it to the side. I suspect that at some point towards the second half of the year, we'll see the Fed come to action, and we'll see some more looser or lower interest rate policy coming out of them. And I think that'll ultimately be one more sort of headwind that will turn into a tailwind for these markets.
Is the worst of the volatility behind us, Sean?
Well, volatility is part of the market, right? Volatility is the price that investors in equities pay to get the higher returns that equities give over time versus short-term fixed income. So it's always going to be a part of it. I like to say you could describe the stock market in 8 simple words: the advance is permanent and all declines are temporary. As human beings, when we go through these declines, it's very difficult because our emotions get the best of us. But for long-term investors, they should embrace volatility as opportunities to buy things that have maybe gotten cheaper to where they were. And, it's the only market in the world when things go on sale, people don't like to buy.
All right, Sean O'Hara, president at Pacer ETFs, joining us from Palm Beach, Florida. Sean, always good to get your take. Thank you.
Thank you so much.